we have the S&P 500 up fractionally, and the NASDAQ's been flipping between small gains and losses all day. So we really don't know. It's going to be right down to the wire. It is interesting, though, that Apple is now higher. Earlier, it had been lower, and that's probably going to be one of the dividing stocks there.
Yeah, it's interesting, right? Though I was surprised, too, to kind of look in earlier, and the semiconductor space was definitely outperforming. You had NVIDIA price targets going up, and you had folks in general, because Intel was a top gainer, I think, in the S&P, right? Just that whole chip space really moving to the upside.
Yeah, a lot of strength there, which has not necessarily been the case. We have had that pause in NVIDIA. I'm going to check in super quickly. We all love to do our live charting on Bloomberg Business Week here.
Abigail Doolittle likes to do it.
It's so much fun.
Abigail does it because she knows how to do all the charts.
It's pretty awesome.
Well, it's just really fun to see like what the instant reaction is here. So this one is we're now out of correction territory. We now have NVIDIA down about 7% from its recent peak. It's hard to read this one, actually. It's one of those ones where it could really go either way. I do see a big gap below 100. It goes back to what I had said last week or the week before. If we go below the last low at about 118, then there's going to be a breakdown. But if 118 can hold, it suggests that investors have enough confidence in NVIDIA. They don't mind the 150 plus rally on the year after the 2,000 or 3,000% plus rally over the last few years. It could be macro what's going to drive these investors.
I'm curious about Meta Platforms because that closed at a record, a fresh record on Friday. And we saw today a price target raised by Wedbush to 570 from 480. Why are shares down 2%?
That's an interesting question. And also we have Wells Fargo, and we have news saying that Meta's top line will rise strongly on ad spending. So let's do another live chart, because the reason the charts are so valuable, if you assume that every buyer and seller sells and buys on all the information and emotion that she or he has, it encapsulates everything. So the chart price is just a way of seeing what the whole market is saying. So you're basically looking for a trend, or you're looking for a battle between the bulls and the bears. Now, given the fact that it was at an all-time high last week, and then you have good news today, maybe a little bit of sell the news. This is a strange chart, actually. It looks like it's going to go right back below 500 in pretty quick order. They don't report for a little while, so it's unclear what might potentially drive that, if that does turn out to be the case. But it looks like last Friday's move was actually a move that won't last long. Investors will rethink it for the stock to go back down. But in terms of big tech, of course, everybody's thinking about the earnings season in a couple of weeks. Will these companies be able to deliver growth again? And Meta has been one of the big tech companies that has actually been delivering double-digit growth after many quarters of single-digit growth for all of these companies. So there is some pressure, but we have positive headlines on the ad spending. But price is telling us there are some investors that are a little bit skeptical about something ahead for Meta.
What do you make of the trade in general? Because I feel like it's a bit mellow, and I don't know whether it's because we're getting ready for earnings. There's a lot of political angst and churn, I feel like.
Yes.
You've got a lot of important economic data points. We're going to hear from Jay Powell. There's a lot coming at investors this week.
I don't disagree with you at all, Carol. Right now, it feels like a little bit of a lull. Beneath the surface, it is actually a dramatic battle between these. Meta's down 2%, as Tim was talking about. Amazon down 0.6%. ServiceNow down 5%. Then you have NVIDIA up 2%. These are not small moves.
Right.
So there's really some tension beneath the surface, but net, there's not much happening. I think investors are waiting for all of the above, what you're talking about. They're waiting for earnings. They're waiting for the Fed. And they're also waiting for Fed Chair Jay Powell. We talked about this last week, that I heard through a source that this talk that he's going to be having with Bloomberg's David Rubenstein on July 15th at the Economic Club of Washington, D.C. was requested for the first time by Fed Chair Jay Powell, and they were freaking out because they don't know what it means. So you have to wonder, what is the messaging that he wants to deliver potentially? It could be nothing.
I'm running for president. No, I'm just kidding. Just kidding.
Paul is probably freaking out in the
post-July 15th, 4th humor
in the control room. But it's hard.
That's interesting, though, right?
Yeah, it's very interesting. I mean, I'm going to be. And they do an interesting interview, I would say. The last one that I saw, I think it was a year and a half ago. I think it was in February of 2023. Two lawyers. I've seen a couple between them. One where Jay Powell, his answers. I mean, David Rubenstein probably went through 100 questions, and I've heard that he does prepare hundreds of questions in advance. But he must have gone through 100 questions in about an hour, because Jay Powell, being the attorney, answered every question in about 3 words. The last one, which was very skilled. I mean, it was an interesting battle between
only answer what you've been asked.
Yes, it was
Do not expand.
The alternative is being very long-winded because they, historically they're paid by the hour.
Well,
right? So.
yeah, that's true. So the first interview was definitely the short answer. Then the second one, there were longer answers, and I believe that there was some sort of market reaction in that February 2023, although I cannot quite remember. But stay tuned; that could certainly be an interesting one. And if we have time, Paramount. It's so interesting. Yeah. The deal has finally come through, and now we have this stock down. I think a little bit of sell the news for sure, but I know that our Paul Sweeney is saying that this is going to be a tough one to turn around, and he's not convinced that David Ellison's Skydance team is the team that can get that done.
Ouch.
Yeah.
They haven't even, the ink isn't dry.
No, it's not. You're right.
All right, Abigail Doolittle, great stuff as always. She is our chief market correspondent here at Bloomberg News.
Okay, so that's some of the macro and the backdrop of some of the stocks that are making big moves today. But the question is, who's trading in this market? Well, think back to 2021, the meme stock era, when legions of retail investors flooded the stock market, eager to chase the stock of AMC and GameStop and the like. It was a fever that was sure to break, right?
Yeah, no doubt about it.
Okay, when rates went up, the stimulus checks stopped, and everyone had to go back to the office?
Yeah.
Did that happen?
Abundantly clear.
Yeah. It all stopped. Nothing, meme stocks stopped, right?
No, we are living in a new age of finance. It's never been easier to bet your money anytime, anywhere, and meme stock craziness is here to say, so is gamification. It is on.
Claire Ballantyne is Bloomberg News personal finance reporter, and for Bloomberg Business Week, she writes about the new age of market speculation. Claire joins us here in the Bloomberg Interactive Brokers studio. Check out her story on the Bloomberg terminal and at bloomberg.com/businessweek. So Claire, is this all about a smartphone? Is that what it is?
It's easier than ever. You have it in your pocket.
Is that why the meme stock will never die?
I think that's a huge part of it.
Yeah.
I mean, there are a couple of forces. Obviously, there's the these apps that make it easier. There's, everyone has an iPhone now and can trade, when they're on the subway or just walking around. And then there's also the move to no fees. So there's very little cost or friction between young people and anyone who can just trade in and out of stocks with ease.
How much of is it the ease? I also thought it was interesting, Tim and I were talking before we got going, that you could now just buy a slice of a stock. And I think about fractional ownership has made it potentially much more accessible.
Yeah, I mean, we live in a world now where these new investors coming up, these are, the Gen Z, the young millennials, they don't even know what it was to have to pay fees on stock trading. They have no idea that fractional shares were one time not a thing.
Right.
They just operate where if they see a company that they're interested in, they can go out and buy it, no problem.
What? What do you like? It's what?
No, I mean, if you think about the name Odd Lots, the popular podcast, right? The whole idea is that it's less than the normal unit of trading, right? And it's sort of a historical anomaly that you would need that because of fractional trading and because it's so easy to buy and sell, Claire. And the whole game has completely shifted. I guess my question for you is, net, is this a good thing?
I mean, I think there are pros and cons to it. The cons are obviously that people could lose a lot of money. It can be very easy to get caught up in this whole gamification. You're swiping for stocks like you would on swiping for dates on Tinder, and then you get into something that
literally you can literally do that.
You can literally just press buttons, open a trading account in minutes. It's so easy.
I don't think people realize this, because I mean, maybe people do that aren't journalists and not allowed to trade. Like, we're not allowed to trade stocks. Like, that's not something we can do. But it's literally a game on some apps.
And maybe go through where it used to be to where it is today to show the extremes.
Yeah. So, I mean, a few decades ago, if you wanted to buy a company that your friends were talking about at a dinner party, say it was $50 a share, you call your stockbroker up, you ask to buy a round lot of 100 shares. That's $5,000. Just for one stake in one company. If you want to be diversified, say you want 20 companies, you need $100,000. That's crazy for most people. Now with fractional shares, you can buy just a slice of a stock. And to top that all off, there's the fees that kept decreasing. Back in just even 2005, fees on average were $13 a trade. Now it's $0. So it's been a drastic transformation in just a few decades. And on top of that, you've seen the rise of these apps, the Robinhood. So now, I mean, teenagers are betting money in the stock market now.
So is it the democratization of finance and investing, which many have been pushing for years, I feel like, as a good thing? Or is it not so good that you make a trade and you maybe make some money and confetti comes down and you're like, yay?
I mean, there's huge risks.
Are you removed from the reality that there's money involved here?
I mean, you definitely are. There's a huge risk. That's what everyone was saying in 2021. I hope that, people are getting smarter about this. And I will say that some of the experts I talked to for the story said that their big fear was not people getting involved in stocks that were risky, but it was that they would get burnt and then they would get out of the stock market forever. Whereas we know that investing in a diversified way is a good way to build long-term wealth.
What's different, though? Because you could always lose money, right? And you could always, is it something different because of the way it's done? What is the big difference?
I think it's that it's become a cultural thing as well. So it's one, it's easier. Two, it's an app on your phone, and it's something that people talk about with their friends. So I talked to one professor for the story who teaches an intro to finance class at her college, and she said all these students in her class have a stock trading app. I mean, and these aren't just finance majors; these are regular kids.
I have to say there's a quote that we love, and it's from Peter Atwater over at William and Mary. He's an economics professor there, and he says trading has become interchangeable with the same kind of online betting that we're seeing for games and in the sports world. It's part of a gambling zeitgeist. And I do think about the rise of online gambling.
Yeah, gaming, as they call it, Carol.
Yeah. Sorry.
Gaming.
Sorry.
Yeah, gambling doesn't have the connotation, but I agree with you.
But it's gambling.
And that's what Peter Atwater says. There's also someone you spoke to for this piece that's expressed concern about somebody potentially losing money in their, younger years, and then being turned off to the idea that this is a tool that people should be using to save for the future.
Well, and that's a huge risk. Even just the conversation that we're having about it, people hearing, stock trading, people losing money, and they think, oh no, the stock market in general is scary, it's bad, it's risky.
Yeah.
But we know that, diversified portfolios of stocks and bonds are traditionally a great way to build wealth over time. And so it's also good for the stock market when more people are investing and buying shares. So there's a bunch of cultural forces at work here.
What about diversified portfolios of meme stocks, Carol? Get some AMC, Bed Bath & Beyond no longer around.
Diversification. Help
Throw
me out
some
here.
GameStop in there.
The people you talk to, the individual investors who are doing it, using their phones to make trades, do they understand the risks of investing?
I mean, I think yes and no. That's the thing with a lot of these people. I mean, we talk about people losing money. For the vast majority of people that lose money, it's not their entire life savings. They've lost a couple $1,000s, which is a lot of money still, but it's not going to ruin someone's life. Same thing with the crypto meltdown. It's like you go and you try to find these people that have lost everything. Luckily, it's pretty rare. So for most of these people, they bounce back, but I think with a lot of people, it's you learn by error.
You know what I thought was interesting is you really, though, have some great data in here, and you talk about members of Gen Z start investing when they're 19 on average. That's according to a Charles Schwab survey released in June. That compares with 32 for Gen X and 35 for baby boomers. Schwab also found that almost 3 in 5 Americans today are investing in stocks. I thought it just gave me some clarity about, kind of who's investing.
I mean, 19 years old, that is so young.
As you write in your piece, brains aren't fully developed until people reach their mid-20s.
Yeah. I don't even know if I knew how to use a credit card properly at 19. I mean, let alone buying stocks. It's wild.
It's very interesting, right? Yeah. Anyway, like we said, a lot of information. You really give us some context and color about exactly what's going on, especially when it comes to a younger generation investing. Claire, thank you so much.
Thank you.
Claire Ballantyne. She's personal finance reporter at Bloomberg News right here in our Bloomberg Interactive Brokers studio.
Hey, coming up next, we're going to talk money and promises. We've got the author Paolo Zanoni on, executive chairman of Prada and international advisor to the executive office of Goldman Sachs. Also the former president of Fiat USA.
So much to talk to him about. This is Bloomberg.
Wall Street. We do check markets all day long at Bloomberg. We've got equities meandering. S&P little change right now, up barely, up less than a point. Any close higher today will be another record. 35th so far this year for the S&P. Right now up by less than 1 point. The Dow up 31. We have got NASDAQ, the Dow down 40, I should say. It's NASDAQ that is up 30. A gain there of 0.2% to be clear. The Dow now down by 0.1%. 10-year yield 4.27%. The 2-year 4.62%. Gold down $34 the ounce to $23.57, down 1.5%. And West Texas Intermediate crude down 1.2%, $82.19 a barrel. Megan Horniman of Verdon's Capital Advisors was on surveillance this morning. She told our Tom Keene and Paul Sweeney she is definitely concerned about not only market valuations, but also market breadth.
If you look at the returns that you've gotten year to date on even the Dow Jones, this doesn't look anything like a very strong bull market to me. This is a handful of stocks, and the rest of these areas of the equity market are telling us that there's some strain in the economy. There's some concern. These are areas that we're actually looking to maybe get into, but it's just a little too early.
Megan Horniman of Verdon's. Eli Lilly has agreed to buy U.S. gut drug maker Morphic Holding for about $3.2 billion, plowing some of the proceeds from obesity blockbuster Zepbound into its experimental pipeline. Lilly shares, they're gaining now by 0.2%, with the big story, Morphic Holding surging 75.1%. Again, recapping, little change for the S&P, higher now by 0.5 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, if you're like most people, you probably don't think about the Tuscan city of Pisa when you go to the ATM to get cash. Send someone money on Zelle or Venmo, or get ready for earnings from JP Morgan, Citigroup, and Wells Fargo, which, by the way,
they are
kicking off bank earnings this week, Carol.
They are. Yet banking, as we know it, dates back to the Republic of Pisa in the 12th century. And to understand modern banking, our next guest argues we must also look to the early years of the Bank of England, Imperial Spain, the United States during the American Revolution, and the Bolshevik Russia in 1917 through 1923, among other case studies in history. I always think about it. You got to look back to kind of understand where we are today.
Paolo Zanoni is executive chair of Prada and international advisor to the executive office of Goldman Sachs International. He's also the former president of Fiat USA. He's got a new book out. It's called Money and Promises, 7 Deals That Changed the World. Paolo joins us from Milan. Paolo, how are you?
Not too bad, thank you. And you?
We're doing well, thanks. Hey, you are a historian. You're also, so much of your experience comes in the world of business. We'll talk about all of that. Why do you think it's important that everyone understand the history of banking?
Because I think it's the best way to understand the core business of banking and what banking is all about. I think that if you see it, how it developed across century without changing that much, I mean the core, you get an idea of what really lies at the heart of banking, and that's that.
That's such a fascinating thing to say when we talk about fintech and disruption and innovation in the financial space. But what you're saying is if you go back, right, to the Tuscan city of Pisa, a lot of what we're doing today was started back then, right? And we continue to do it.
Yeah, at least the core of it. Of course, it changed. But the essence of the banking business was there already. And those people understood it so well, and they spell it out in their ledgers in such a way that it comes across with an incredible clarity.
Can you talk a little bit about the writing process here? Because the book relies on some primary research that you did.
Yeah, the book is both on secondary and on primary research.
Talk about the primary research and what you did here.
Yeah, okay. Now, yeah, I know it was a long process. And so let's say, for instance, let's take Venice, for instance. Everybody loves Venice. Venice is an incredible city. And the Venetian Republic that lasted for about 1,000 years they were, they were very clever, and they like writing everything. And so if you go to the State Archives of Venice, you have probably about 70 miles of document.
Wow.
Where if you are careful and if you are lucky, you can find almost everything and anything about the history of the Republic of Venice and what they were all about. And I was either clever or lucky, probably more the second than the first. And I was able to find the ledger of the first 6 months of operation of probably the first public bank in the Western world, which was the Banco Giro. And if you read that ledger, you immediately get a pretty good idea of the way Banco Giro was helpful to the state. See, what Banco Giro was essentially doing was an exchange of debt. His asset were the public debt, the promises to pay of the various branches of the Republic of Venice, and his liabilities were the promises to pay the supplier of those branches. And in this way, Banco Giro was immediately converting public debt into purchasing power, and purchasing power that was accepted by everyone. That was marvelous. And Banco Giro for 200 years was the only bank in the Republic of Venice, and that bank allowed Venice to go on for 200 years, even when it had lost most of these trading routes and most of these colonies.
Right. Well, what's interesting too, you do talk about, right at the top of the book, that debt is not a bad thing. And I think we often talk about good debt, bad debt, but you do, as you just explained, how debt can give people, companies, institutions leverage, governments leverage, right, to do so much more.
Modern money is debt.
What?
The currency of modern nation is the promises to pay of the banking system of that nation. That's the essence of it.
So we have a lot of discussions about debt today, certainly U.S. government debt, ballooning debt. Yeah. We worry about consumer debt. We worry about higher education debt, credit card debt. Are we wrong to be...
Worry.
What?
And we are right to worry, but
okay.
That debt, in many cases, is also the asset of a bank. Mm-hmm. And based on those assets, the bank issues the same amount of liability. And the liability of the banks, of a bank and of the banking system are money. They are purchasing power available for everything, for buy refrigerators or for investing in defense goods or in whatever.
Well, why is it good for states to have debt?
Modern money is a debt of the banking system.
Why is it good for states specifically to have debt?
Because that's a way they transform a public debt into purchasing power that is immediately available. It's exceedingly clear in the ledger of the Banco Giro. Huh. See, at one point, the people in Venice were starving, and there was an office called the Grain Office that was in charge of purchasing supplies around the world. And the way Banco Giro helped the Grain Office was that the Grain Office offered to pay Banco Giro, and that became an asset of the bank. And on the basis of that, the bank could issue the same amount of liabilities, and those liabilities were money. And the Grain Office was able to purchase wheat and distribute it to the city. That's an incredible, clear example, in my opinion, of how public debt became purchasing power through the intermediation of the bank. The bank didn't do anything else that exchange debt. the debt of the state for the debt of the banks. But the debt of the banks was money.
Paolo, we only have about a minute left here. There is a chapter on American dreams. As you say, there's 7 deals that changed the world. Just tee up in about 40 seconds, if you could, about what you get into when it comes to what went on in America. Just quickly.
The first public bank in America was the Bank of North America. And the Bank of North America was doing exactly what Banco Giro was doing. The first shareholder and the first debtor of the Bank of North America was the Continental Congress. And the Bank of North America was making bank money available to the Continental Congress. And bank money was not like the Continentals. It didn't lose purchasing power. It did not devalue. It had the same purchasing power of silver and gold money and gold coins. So
yeah, well, you tee it up. Yeah, no,
Sorry.
you tee it up well, and as you said, there's 7 that you get into in particular, and I think it's just such an interesting understanding of where we are today. We're so delighted that you were able to give us a tease into it and all of it. Paola, thank you so much. Paola Zanoni, he is executive chairman of Prada, and of course his new book is Money and Promises, 7 Deals That Changed the World.
Hey, let's get to Washington, D.C. and check the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nancy.
Thanks, Tim. President Biden is pledging to fellow Democrats he will remain in the 2024 presidential race, seeking to quell an intra-party revolt against his campaign. We get more from Bloomberg's Amy Morris.
Biden wrote a letter to Democratic lawmakers saying that it's time for the party drama to end.
I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
Biden telling MSNBC he's not worried about his major donors either. This comes as a Bloomberg News Morning Consult poll shows Biden narrowing the gap with Trump in swing states. It shows Trump leading Biden by only 2 percentage points and that Biden now leads Trump in Michigan and Wisconsin. In Washington, Amy Morris, Bloomberg Radio.
Tax cuts, a plan to seal the border, and a large deportation operation are among the items that appear on the Republican Party platform. A committee of the Republican National Committee today approved the platform ahead of next week's convention. What's missing, though, is any mention of abortion, which has split Republicans. Hurricane Beryl is now Tropical Storm Beryl. Its wind speeds are now down after making landfall earlier today in Texas. But Houston Mayor John Whitmire says flooding is stranding many local residents.
We're in a rescue mode, life safety. We're literally getting calls across Houston right now asking for first responders to come rescue individuals in desperate life safety conditions.
Whitmire says the majority of Houston residents had their power knocked out due to Beryl's high winds. The major heat wave hovering over the western U.S. is showing no signs of letting up. It's expected to scorch the region for several more days. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Tuesday, we do check markets all day long at Bloomberg. We have got the Dow, the S&P, they're both negative. We've got NASDAQ advancing. Little change. That is the key takeaway. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Charlie, that's right. U.S. stocks are trading mixed right now, with the Dow currently down 42 points. S&Ps are down 2, while NASDAQ is still higher by 13. The U.S. 10-year yield of 4.27%. Gold is down 34. Oil trading in the red, and Bitcoin, that's lower by 1.6%. Among the main 11 S&P sectors, leaders were tech and real estate. Telecom was under pressure, and leaders to the upside in the Dow, Intel and Travelers. Note that Intel rose 6% and broke out of a range, while Nike fell 2.8% and led to the downside. After earnings, Corning rose 12%, and in deal news, Eli Lilly agrees to buy U.S. biotech Morphic in a $3.2 billion deal. Wrapping things up, Bridgewater's Jensen says the AI boom is not like the 1999 tech bubble. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Globe.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. Just under about 18 minutes left in today's trading session. I feel like this has been the trade for most of the day, although we've been bouncing around a little bit on the NASDAQ 100. Call it, slightly higher but a little bit lower on the S&P and the Dow right now.
We're orange on the S&P.
We're orange?
We're orange.
Where's orange?
Right there.
Oh.
Now red, as soon as you looked over. Orange is neither green nor red.
How can that be? You're either up or you're down, aren't you?
It was 0.00. It was literally flat. There, now it is again.
I know. It's that kind of a day. We've got a lot coming up. So we're curious to see what Lauren Sanfilippo has to say. She's Senior Investment Strategist from Merrill and Bank of America Private Bank. She joins us from Maryland on this Monday. Lauren, good to have you here with Tim and myself. How are you? Do we have Lauren?
I don't think she can hear us. We're gonna work on her audio, and we're gonna get Lauren back in just a minute. In the meantime, I want to go back to something that Abigail Doolittle said, which I thought was really interesting. She said that basically the S&P 500, at the index level, is because it's flat, is masking some pretty big moves that we're seeing in underlying equities. Like Meta Platforms is accounting for 3.1 points to the downside right now. It's down 2.2%. You got Microsoft down 0.5 percentage point. ServiceNow, one of my decliners, down 5%, Carol. Chipotle, another one of my decliners, down 5.8%.
It is down a lot. And then you've got a name, like I've been watching the semiconductor space today. I mean, Intel has been a top gainer in both the S&P 500 and the NASDAQ 100. It's up, looks like about 6% as we speak. But if I look, I'm going to pull up the Philadelphia Semiconductor Index, kind of been watching it throughout the session. There are 30 names in the index, 29 are higher today. Intel at the top of that list, AMD is up about 3.5%, Marvell is up more than 3%, and you've just got one to the downside. Micron is lower in today's session. So it's just interesting. There have been some analysts coming out raising their price targets on NVIDIA specifically, but other analysts talking about other names in the sector, including Intel, in terms of some of the trends that are going on and how they can stand to benefit.
Well, let's get back to Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us from Maryland. Lauren, how are you? Still?
Good.
Oh, there we go.
Nice to be with you. Sorry about the technical difficulties.
No worries. Sounds like there's a little bit of a delay, so we're going to let you breathe a little bit. How are you looking at the market? I mean, we're completely flat on the S&P 500 for the day, but as we were talking about, masking some kind of big underlying moves. What's your view?
Yeah, so not flat if you look at last week, right? I mean, we're seeing new all-time highs again on the index level. And again, it's that story of that narrow market. So I think there's more of that probably through Q2 earnings, which we kick off at the end of the week with the banks, of course. And then maybe Q3 earnings, we see a bit more of that broadening. But that's really the story that we're talking to investors about.
Lauren, how are you thinking about this week? There is so much going on, right? Jay Powell's going to be up on Capitol Hill. You've got a lot of economic statistics coming our way, including some reads on inflation again. And then, of course, the earnings season does get underway later this week. It's not just the big banks, but that's obviously a focal point here. Are we just kind of in a wait-and-see mode?
We are in so much that on Friday we saw that labor market data come in a bit cooler, and then we'll get more confirmation on the second part of the Fed's dual mandate. Inflation, we'll get that CPI print, that PPI print this week. And then, of course, the Fed's focus will be on that PCE print, but it's a good sort of gauge for where the PCE could be going later in the month. So a lot, you're right, a lot to focus on here. And then there's some election turmoil as well we're seeing overseas. So there's a lot to look at. But given it all, I mean, the VIX is still fairly subdued around that 12 level. So we're sort of putting that all together and thinking about sort of what that market sort of action could be around mega cap tech and actually non-tech opportunities as well.
Okay, you talked about election volatility overseas. What about election volatility here in the U.S.?
True. And we will see a lot of that ramp up closer to the fall, of course. You see that VIX spike right before the election, right? So more to come for sure, but plenty of headlines and noise now. It's unfortunate that we got an early start on all of this sort of campaign season and all that.
You know, I'm looking at some research that you and Joe Quinlan put out June 25th, and it says pessimism sells, but optimism pays. 10 reasons for optimism on America's birthday. So are you more the glasses half full versus half empty when you look at the U.S. equity market?
That longer term perspective, yes, I would say. Just in terms of,
but what's longer term?
This U.S. what's longer has proven?
Lauren,
we're coming off of Q1 growth rates of 1.4%.
Oh, forgive me. I know we have a delay, so I'm so sorry to everybody. I do want to ask you though, when you say longer term, what does longer term mean to you?
Well, in terms of asset allocation, we are looking at that U.S. as that preferred region. You're seeing that clearly in the flows for investors allocating to that U.S. trade. Still, investors aren't so much asking us about international. We do think that global growth has bottomed, but we're not yet fishing overseas. And that's sort of been the trade. I mean, it's that resiliency of the U.S. economy. It's that foreigners, their demand also for U.S. assets. So it's still our preferred region, the bias that we've been carrying for some time now.
What changes for you, though, to make international equities more of an opportunity or more attractive? What do you need to see?
Well, certainly not valuations, considering valuations are beaten up enough, right? But I just worry that international equities could probably stay cheap for some time. Just because they're cheap doesn't mean that they couldn't get cheaper. So I'd like to see a little bit of a return of the fundamentals, right? So like looking at growth rates even, I think that matters. And I do think you're seeing a little bit of a bottoming now, but I want to be sure of that before we sort of dip our toe into international.
The biggest risk, Lauren, to the U.S. equity trade in your view right now?
The biggest risk, I would say, is maybe not what we're looking at for Q3 and what consensus estimates are looking at for the earnings trade. If you think about the Mag 7 catching down and the 493 other catching up, I understand that growth rates for the Mag 7 will come down, right? That rate of change, that makes sense to me. I think you do need to see a little bit of a cyclical bottom here in the U.S. The ISM prints from last week worried me a bit in that the services side of things, which is the bulk of our economy, did weaken some. So I worry about that trade. That's that 493 catching up. I think the market has remained irrationally narrow for some time now. I know that we've settled into that now year to date and even parts of last year, but that broadening out, I think that's sort of what that risk.
Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us from Maryland. Coming up, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and Bloomberg Originals. We're going to tie you down to the close.
Could we see records? That in a moment.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. 3:53, 7 minutes to go ahead of the closing bell. We have got the S&P, NASDAQ both advancing. Any close higher will be another record. The Dow lower. NVIDIA shares up now by 1.9%. NVIDIA's target has been raised at UBS, which cites, quote, exceedingly robust demand. NVIDIA up 1.8%. But Friday, you recall, we saw a downgrade for NVIDIA at New Street Research. Pierre Ferragu is head of global technology infrastructure at New Street. He downgraded NVIDIA to neutral from buy.
Valuation is relatively secondary. I think the valuation of NVIDIA is still reasonable, but it's rich enough to suffer if NVIDIA disappoints not by missing expectations, but by not beating them.
And again, NVIDIA shares up by 1.8%. Pierre Ferragu with New Street Research. Taiwan semiconductor manufacturing briefly surpassed $1 trillion in market cap after Morgan Stanley joined a list of brokers boosting price targets on the chipmaker before its earnings. Shares of Taiwan Semi up today by 1.6%. Paramount Global has agreed to merge with Skydance Media in a deal that hands control of the storied Hollywood studio to producer David Allison, ending one of the industry's most dramatic acquisitions. Shares of Paramount Global down right now by 4.8%. Boeing will be pleading guilty to criminal conspiracy in connection with two fatal crashes of its 737 MAX jetliner, an agreement that disgraces the storied plane maker as a felon, but avoids a bruising courtroom confrontation as it tries to rebound from multiple crises. Boeing today up by 0.6%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, in just a few minutes, we're heading over to our TV colleagues, getting ready to count you down to the closing bell on this Monday, July 8th. Having said that, this story now popping up among the most read on the Bloomberg, and I feel like it kind of goes to a conversation we had earlier about banking and debt. Debt can be okay, but we talked about it a little bit earlier with one of our guests.
Yeah, it's about the U.S. consumer borrowing increasing in May by the most in 3 months. It reflects a jump in credit card balances. We'll talk numbers here. Total credit outstanding rose $11.4 billion after a revised $6.5 billion gain in April. That's according to Fed data released today. The median forecast in a Bloomberg survey of economists called for an $8.9 billion increase for May. The figures are not adjusted for inflation.
So revolving credit, we're talking about credit cards that advanced $7 billion, also the most in 3 months. Non-revolving credit, so you're talking about loans for vehicle purchases and school tuition, that increased about $4.3 billion.
Okay, so many Americans who have whittled away their pent-up savings accumulated during the pandemic are now relying on credit cards and other payment methods to spend. Combined with the rise in the cost of living, it's further straining household finances and points to a slowdown in consumption. Also, things have gotten more expensive.
Listen, we've been doing some reporting about the excess savings that people have been holding up or had stored up during the pandemic, thanks to some of the money that came from the government or not spending on other things that we've been reporting that that's gone, and the U.S. economy is, kind of getting ready for an impact. That's why we continue to watch the economic data points that continue to come out. We see some slowing down, right? Some concerns about some weakness. Certainly, we saw that a little bit, right, in the jobs report.
I wonder if Fed Chair Jay Powell will be asked about this tomorrow.
He may be, yeah. I'm sure some of this is going to come in terms of his official take on or how he sees the economy right now.
We should note that the monthly consumer credit report does not include mortgages. The quarterly data from the New York Fed, it shows that household debt, including mortgages, rose to a record $17.7 trillion in the first 3 months of the year. Consumers have added $3.4 trillion in debt since the pandemic, and borrowing over the past few years is carrying much higher interest rates.
Yeah, the Fed's report today showing that borrowing rates on credit cards that charge interest rose to 22.76% in May. That's just shy of a record in data back to 1994. A 60-month loan from a commercial bank for a new vehicle purchase stood at 8.2%, also near a series high. That's what's made it so difficult and so different, right? Those higher rates. All right, folks, do not go anywhere. Just about 2.5 minutes left in today's trading session. It's been kind of an anemic trade, at least on those major averages. We'll see whether or not we see another record on the S&P and the NASDAQ 100. All right, over to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele to help take you through the closing bell. It's our global simulcast, beginning right now with Scarlett Fu in the TV studio, Tim Stenovic in the radio booth, and a beautiful Carol Masser joining him alongside. I know.
Did you guys bond?
I know, we bonded. Don't worry, I'll be mad at her by tomorrow. We welcome our audiences across all of our Bloomberg platforms, radio, television, and our partnership with YouTube. Carol.
All right, having said that, I'm just, a guy I've lost for words. Semiconductors really outperforming in today's session. Take a look at the Philadelphia Semiconductor Index. There's 30 names, 29 are higher in today's session. I'm going to get into it a little bit later on in my gainers, but you do have some analysts out with some calls about one name in particular and kind of the group overall, or some of the other names in the group.
The S&P 500, it's in the green now. It's pretty much just flat on the day, and it kind of masks some bigger moves that we're seeing if you peel back the hood. We're seeing sort of outsized share move higher from NVIDIA, up 1.8%. Meta Platforms is down 2%. ServiceNow down 5%. So even though the index is flat, we're seeing actually some big moves within some of the stocks in there.
It doesn't matter if it's flat or just up slightly. Any positive mark next to the S&P 500 would make it the 35th closing record for this year.
I do have to point out, though, that what's interesting is that the semis are getting a nice boost. You get the stocks up. They hit an intraday record at one point. NVIDIA's up, had an upgrade. TSMC hit $1 trillion in market value. Like, that stuff is really kind of moving higher, in addition to Apple, yet another record high.
Yeah, absolutely. And it gets to the point, too, here as to whether you do have investors out there really, truly searching for something other than chip stocks, software stocks, and I guess basically everything that has sort of made this market what it is since those lows back in October. For right now, you're not really finding much else out there. That is the trade, and you see that reflected on your screen today, although the moves are modest indeed. The Dow Jones Industrial Average down about 0.1%. The S&P 500 up about 0.1%, 55.7285 and change right now. The NASDAQ Composite up about 51 points or 0.3%. And you did get some outperformance out of the small caps today, with the S&P 400 up about 0.3% and the Russell 2000 up 0.6.
All right, back to the big caps I go, the S&P 500. And folks, you've got 278 names to the upside, gaining some ground today, 222 losing ground, and Scarlett, you've got 3 unchanged.
Yeah, and it's a very mixed picture when you look at the sector performances. Let's go to the IMAP right now for the S&P 500. You've got 11 sectors, and the biggest, most heaviest weighted sector that is leading the gains is tech, that is led by Corning, and materials and REITs also modestly higher. On the downside, communication services, and this is really paramount, dragging that group down by more than 1%. Energy and consumer staples also finishing down slightly.
Yeah, definitely a mixture of red and green there. All right, let's get to some of the individual gainers. The number 1 gainer in the NASDAQ 100 today, folks, Intel. It's the number 3 gainer in the S&P 500. This one finishing up more than 6% today, on track. This is a 4th straight positive session for the name. It's up more than 8% over that 4 days of trading. Milius Research saying we are believers in a catch-up trade for some in semis, hardware, and even software, those with lower expectations, adding that AMD, Intel, Apple, and IBM could all benefit from such a trade. So you definitely had Intel benefiting in today's trade. NVIDIA also up just shy of 2% off its highs of the day. UBS raising its price target on the company to $150 a share from $120, maintaining its buy rating. The stock closing at $128.23. So certainly has some room to run with that $150 price target. Another gainer in today's session had to do with some deal activity. You're talking about Morphic Holding. Ticker is MORF, not a name we talk about it a lot, up 75% in today's session.
That's a great ticker, by the way.
It is It is a great ticker. Eli Lilly agreeing to buy it. It's about a $2.8 billion market cap biotech firm, U.S. gut drug maker. Lilly buying it for $3.2 billion. So some of the money it's been making on some of its obesity blockbuster Zepbound, plowing into something to maybe build out its pipeline. And one more for you, Corning, GLW, number 1 gainer in the S&P 500, up almost almost 12% today. We're getting into earnings season. This company coming out and saying that it reported some preliminary core sales for the second quarter of about 3.6 billion, guys, and that's ahead of the estimate of 3.41 billion. So that's a look at some gainers today.
Okay, you got the gainers, I got the decliners. I do want to start with one of the worst performers on a points basis in the S&P 500. That would be ServiceNow. Shares falling the most since May 30th, falling 5% today. This after Guggenheim cut its rating to sell from neutral. The price target has been set to $640. It implies a 21% decrease from the close yesterday. Guggenheim says that the software company's valuation does not match its future risks. And let's talk Paramount Global, because a deal finally done. Shares, though, falling more than 5% after the media company agreed to merge with Skydance Media. The deal hands the control of the studio to producer David Ellison. Finally an end, at least we think, to one of the industry's most dramatic acquisitions. We talked to Chris Palmieri about this a little earlier. He said that one concerns investors may have is what exactly is going to be different now? You know, it still has struggling assets, including those legacy linear TV. They're still trying to figure out what to do with streaming. The team out in LA did speak with David Ellison. He said that two assets he loves include CBS and Paramount Studios. So those are probably not going anywhere, but the question remains what happens to those other assets. And then another stock down more than 5% today, CMG, Chipotle Mexican Grill. No fundamental news, but shares fell more than 5%. The 50-for-1 stock split took effect back on June 26th. Shares have slid about 9.6% since then. We should note that restaurants with positive foot traffic that have shown positive comps so far this year, like Chipotle and Wingstop, have performed exceedingly well, while the rest have struggled. This is according to Jim Solera over at Stevens.
It's nice to have the whole team back, guys. This feels like, you know, real close. All right, let's get to the bond market. Nothing happens. You're seeing yields a little bit up in the front end, down in the back end. You had that New York Fed inflation expectations numbers that came out, if you guys saw. So the 1 and the 5-year moved a bit lower. The 3-year moved a bit higher, but they're all kind of in the range at 3 or below. So that's something. But let's be honest, bond market's not going to move until at least maybe Powell, at least CPI.
All right, so there's a lot going on this week. Yep, we could be talking earnings, we could be talking the economic reports, we could be talking Powell, but we're a little obsessed with a date that's, 11 years from now, 2035. Mark your calendars, guys, because
we'll all
it seems
be here,
okay?
I will definitely be here.
Yeah.
Well, anyway, that's when that final big Gateway Rail project between New York and New Jersey, it seems like it will get done because they got another big chunk of money, Tim, right, from the government.
They locked in $6.9 billion in federal funding. Securing the funding brings the total federal share of the project's cost to more than 70%, with its portion nearing $12 billion. That's according to the Port Authority released today. Guys, there's one tunnel right now that holds one train going one way between New York and New Jersey.
We wonder why there's problems.
And when it rains, everything stops.
Yeah, forget snow. So does this mean that there won't be 90-minute delays anymore on the PATH train? Is this the point?
Well,
that's the idea.
I guess it's the New Jersey Transit train and Amtrak. That's what the...
It's got to get better, right? It's got to get better. Another tunnel, and they're going to do some upgrades on the other stuff, too.
And that would, Carol.
Well, you said 2038, but I mean, we got to add another couple years.
I think our grandchildren will definitely enjoy that whenever it actually finally does open, or great-grandchildren, maybe. Another story
I'll be teleporting by then, but anyway, go ahead.
Maybe, potentially. Speaking of which, I was an interesting story going on with regards to Apple and Android phones. I don't know how many of you have Androids here, but if you work for Microsoft, at least if you work for Microsoft in China, you're not going to be allowed to bring that Android into their facilities anymore. They're basically saying because of security issues, they're saying employees can only have iPhones inside the venue.
So if you're a Chinese consumer, you can tell whether you work for the government or whether you work for Microsoft based on what phone you're carrying at this point.
I thought that was interesting too. Like, why are they splitting that up? What does the government know that Microsoft doesn't? Or what does Microsoft know that the government doesn't?
Well, the government just doesn't want people to use the Apple iPhones, period. And Microsoft is doing this for security reasons.
Talk about frenemies, though, right? Microsoft and Apple. These two companies, for years, have competed against one another. And now one company is saying, you must use our competitors' phones in order to, be in our office in China. It's pretty amazing, the shift in the shift in these two companies that we've seen.
It also highlights the other issue, too, is that there's, for the most part, at least in terms of operating systems, there's really only two out there, right?
Right.
I mean, I know there's something else I'm probably forgetting, like BlackBerry or something like that, but I mean, this is it, right? I mean, you have one of two options.
Yeah.
Can the government then go back and say, Microsoft, no, we only want these phones? Or it's just how you have to be a government employee in theory?
That to me is like the bigger question, right? Like the involvement maybe of the government in all of this?
You're right. Are they going to Bigfoot and come in and say, no, you can't do that? That doesn't work for us at all.
Or maybe no phones at all.
Oh, man.
Well, that's the teleporting. Going back to something else, maybe it's like a different teleportation thing that you just like osmosis things and it goes to someone else's brain.
Or you just work from home and you don't use a device.
Or that.
No phones at all. It's like, a high school class that doesn't allow phones.
Watch yourself, Scarlett.
I know.
Teleporting work from home.
Scarlett, could you come with me, please? You're gonna get a little... No, I'm just kidding. All right, guys, that's a wrap. Our Monday cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. It's great to be back with the gang. All right, we will see you all. Well,
we'll see you Friday.
We'll see them on Wednesday.
No,
we won't.
I think Friday.
Oh, is it Friday?
Yeah.
Well, you guys are traveling, right?
Yeah, we're traveling.
All right, sorry about that. So we'll see you on Friday.
Good luck in your travels.
Bye.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. Carol, I want to talk a little bit about the latest goings-on with extreme weather, because more than 2.5 million homes and businesses in Texas lost power. At least one person was killed after Hurricane Beryl made landfall in the state, bringing howling winds and driving rain that knocked out electric lines.
Got to say, I've been thinking a lot about my family because I have a lot of family throughout the state of Texas. Rob Carolyn is a Bloomberg News meteorologist. He joins us right now. Rob, good to have you here. What do we know about the storm right now?
Well, it's moved northeast of the Houston area, and it's moving northeasterly at about 15 miles an hour. So the good news is, with it moving off towards the north and east, we're not going to see the excessive rains that we've seen with some of these storms that have affected the Texas Gulf Coast. Generally about a 3 to 6 inch rainfall along the path of the storm. We are concerned when it gets up into Arkansas tomorrow that the Ozarks may see about 4 to 8 inches of rain, which could lead to flash flooding. Biggest problem we're seeing right now is eastern Texas and western Louisiana under a tornado watch through 10 o'clock this evening. And we are seeing numerous tornado warnings right now across northwestern Louisiana and eastern Texas in the vicinity of Tyler right now. And it depends on which side of the border you are as to whether or not you call the town Nacogdoches or Natchitoches. But that area, too, looking at some tornado warnings currently. The rain has ended for the most part in the Houston area. The winds have decreased on the western side of the storm. So Houston right now seeing winds of about 15 to 30 miles an hour. But east of the center of circulation, which is up around the Lufkin, Texas area, they're seeing winds right now between 30 and 60 miles an hour.
I do want to bring an update because I was looking at some older information. We actually learned that at least 2 people have been killed by falling trees in the state. Winds tearing apart the roof off a suburban Sugarland City Hall. Local news stations showed rescuers plucking a stranded driver from the roof of his nearly submerged truck. Rob, I'm looking at some pictures out of Houston. I mean, submerged trucks on an interstate, completely flooded areas. This is an area of the country, though, that is used to disastrous weather.
Yes, and the Houston area has been hit very, very hard over the last decade by landfalling tropical storms and hurricane. You go back to our tropical storm Harvey, and it dumped over 45 inches of rain on the Houston area because it was stationary. So one of the upsides to Beryl has been the fact that it's been moving along at a fairly good clip. Again, it's expected to start to accelerate by Wednesday morning. The storm should be up around the Indianapolis area as a tropical depression, and then Thursday morning we expect it to be in the eastern Great Lakes, probably producing scattered showers and thunderstorms from the mid-Atlantic states into the Northeast. The real big problem for the mid-Atlantic and Northeast is we've already got a humid air mass in place, and this is just going to add insult to injury. It's going to be very, very humid the second half of the week from the Ohio River Valley into New England, and any of the showers and thunderstorms that we see develop Wednesday afternoon, Thursday afternoon, and into Friday are going to be tropical in nature, and they could put down a couple inches of rain in a short period of time.
We're getting ready for this. Hey, one last question, Rob. Hurricane Beryl, first hurricane of 2024, rapidly became a Category 5 storm unusually early in the year, and we talked about the exceptionally warm ocean temperatures feeding into this and those heat factors. Having said that, what's the likelihood? It sounds like it's pretty high that the 2024 Atlantic hurricane season is going to be above normal. And I think about whether it's the Caribbean, whether it's the Gulf Coast, there's a lot of areas that can be impacted.
Absolutely, because the warm water not only extends from the Caribbean and the Gulf, it extends all the way out into the central Atlantic, what we call the main development area. That's actually where Beryl got going. It's very rare to see a storm develop in June in the central Atlantic. And also as far south as Beryl developed, at about 10 degrees north. Usually you don't see storms developing at that low of a latitude, but Beryl did. The good news is it looks relatively quiet in the Atlantic for the next 2 to 3 weeks. There's some rather large clouds of Saharan dust which have come off of Africa into the Atlantic. Those areas where they're very dry and dusty out over the Atlantic usually precludes development, so we don't see a whole lot going on in the Atlantic for the next 2, maybe 3 weeks. Once we get into August, though, it looks like the conditions in the Atlantic will start to change, and we'll probably see a big ramp up in the amount of activity.
Not